They've done some creative accounting, they've done kind of these creative reconciliations, and they've ended up classifying that as revenue instead of a liability like it belongs. And so it shows two things. Firstly, if it's intentionally done, there's an intentional disguising of a liability, which should be revenue, but it also shows a bit of a control failure, because ultimately this is something that, if this is part of your controls and part of your processes, at some point this should be reviewed by external auditor, internal auditor, whoever is a part of reviewing these processes for a particularly large company.
You're talking about.
Actually, that's a good point. I don't know where.
So have you guys heard about what's happened with the corporate travel management company over the last couple of months or so?
Small parts, but
I'm just learning about it right now.
Well, Hubert, what questions do you have? But firstly, do you guys know about the Annika Wells controversy? She booked a 100K trip for her and her team to New York.
No, go on.
Did you guys hear that in the media recently?
I've heard it, but I never clicked on the link, so you can tell me more about it.
So Annika Wells is, I'm not sure what her role is, Minister of Communications or something, but she flew to New York with her team, spent 100K, and her ticket alone was 30K to New York.
Yes, I have heard about this. Yes.
On business class or something. And everyone was like, how the heck is it 30K? Even if you're going on the most expensive ticket, it's not 30K to New York. And she was like, well, essentially, we just booked it through the travel portal. And they were like, well, still, you're the minister, you've got a team that's in charge and realizes the importance of using public funds. You should have a bit of scrutiny on that. But anyway, she was trying to shift the blame here. And she was like, well, this company, that's what they priced it. This company that is the one that we're talking about today, corporate travel management. So that's the context. They've been in the news a lot in Australia. They're Sydney, actually Brisbane based and founded. And they've been on the news, not just for the Annika Wells incident, but they've had a couple of accounting issues over the last couple of years that have come to, I guess, the media spotlight, and now they're getting smashed because they're listed. They're also, they're seen as the future dinosaur type of company, because you think about this, like we were just asking Hubert off the air, how do you guys book your travel? And he's like, we just go to Skyscanner and we find the cheapest. And that's exactly how it's going to be. Like, either a person can do it or AI is going to do this automatically and comb through the cheapest rates. You're not going to need a portal like this. But anyway, what are the questions you guys have? Firstly, what do you want to know about this company? Hit me.
Well, I guess for the viewers,
Yeah.
I guess for the viewers now. So I guess CTM is a company that books flights for other companies. Is that correct?
Yeah, flights and accommodation. They're like a travel portal. They're like the middleman.
So they sort of have.
all the
So they're the
travel
ones that
related.
have like a buying power, which multiple companies can book for accommodation, book flights, and they sort of can get better prices. Is that how this side works?
Yeah.
Yeah, think of it as like your one-stop shop, right? So if you want to go somewhere, let's say Sydney to Melbourne, okay, I can book my flights and I can book my accommodation to the one portal. So the idea would be like, if I need to do a cancellation, it's pretty easy. Just do it to the one portal and they'll handle, not me
So
having to
it's-
contact somebody else.
So it's just like a large, what do you call it, like the airline agency? That's what it is, right? But like for corporate businesses.
Yeah.
Okay, all right. Okay.
Well,
so,
I mean, what revenue base, like, as in, so are they just Australia or are they global? How does this work for this business
So
model?
they're founded in Australia. They're listed on the ASX.
Yep.
They have a Europe branch. I think that's one of their largest ones. They've got, how this came to fruition is they've got a large contract in the UK with the UK government. So that's one of the reasons this has become bigger than Ben-Hur, so to speak, because it's this issue, which we'll talk about shortly, was identified in the European region. And essentially that's filtered now to the rest of their business, and it's caused this ASX suspension that they're going through at the moment.
Nice.
so they actually got suspended from the ASX.
Yeah, they've got what's it called? There's a term for it. Halting.
Yeah, the
trading
trading
halt.
halt.
Yeah, that's the one. Yeah. That's what they're going through at the moment until their reviews are complete.
Not looking promising, if that's the case.
Yeah. So I'll give you a bit of an overview. If you could think of all of the big fours that could be involved in this, literally everyone is involved except EY. So I'm not pointing fingers here and saying one big four is worse than the other. But all I'm saying is for 14 years, PwC were their auditors. And essentially, they had, I'm not sure why they swapped auditors, but they had to swap to Deloitte. And CTM then self-reported in August 2025 that, hey, they reported to the market, reported to essentially the regulatory overseers that they have these auditor identified potential adjustments because of the timing of revenue and cost recognition in that European region. And so they said, hey, there's a few things we need to look into. And so usually what happens after that is people started devaluing their stock. I think firms that were investing in them almost wrote the value of their stock to zero. And so there was a suspension by the ASX on trading. And so because of that, because now they were with PwC, they then engaged Deloitte as their auditors. They then engaged KPMG to do a forensic audit on all of this. So now 3 of the big 4 I've kind of had something to do with them. So KPMG, I think they're still doing that review, but they found close to 80 million pounds of issues and material restatements that needed to be made over the last couple of years, which is huge. I think they're saying that this forensic review is going to be complete by March, so in a month's time or so. So maybe in a couple of weeks we can talk about the results that have come out of that. There's going to be remediation payments made to customers, and essentially, there's going to be some sort of sanction. So the CEO, the other curveball with this is they've had about 6 or 7 CFOs. Actually, maybe I'm overstating it. It's between 5 to 7, the number, CFOs in the last 5 to 7 years.
Yeah,
so
that's a red flag right there.
Yeah, massive turnover of people. When this issue came out, the CFO at that time copped the brunt of it, but they've had the same CEO for the whole time. And so the CEO has now just finally stepped down, and he's going to stay on like a paid consulting role or something like that, which is pretty crazy. But that's the scandal. Now, what is the scandal? I hear you asking. Actually, any other questions you guys have?
No. So I guess is this is just a case of creative accounting on steroids, or sort of what is this?
Yeah, I mean, they're essentially, well, if we go into the technicality of it, they haven't recognized revenue appropriately, and why companies do that, especially when they're listed, to show that, oh, look, we're a growing company despite all this boom, despite all these things happening around us. We're consistently growing. We're outperforming our competitors. They often put statements out there showing that we're kind of doing better than the economy, and so that gives investors false sense of confidence and helps them, promotes them to continue putting their money in the business.
It'd be just interesting to see if this all started during that COVID spike where all this revenue recognition stuff started playing in place, because corporate travel almost stopped for a period of time, right?
Yeah.
Everyone went online. Everyone stopped traveling, started using technology. So I wonder if that's where the pressure came from. And then it's basically top down, just going, no, get those clients in, do whatever you can, milk the existing clients, right?
Yeah.
And if every company's trying to do the whole let's create value, which means sort of let's price gouge our existing market, they might have, it's almost like you've got a monopoly once you join up to these companies, right? Because you don't then, what to Hubert's point is, you don't end up comparing against other companies to say, is it this the best and fair or reasonable price? You just say, no, this is the portal does that for me, right? You put full faith into that environment, hoping that that vendor's now doing everything in its power. But once you're locked in, what are the controls? We never ask those questions, right? We just go, no, just go to the vendor. Go to the vendor, mate. Sign up. We'll get a report at the end of it. It's nice looking, pretty little dashboard and one invoice, and we don't have to deal with 6 different suppliers. Just one. Our SAP, your payments go through. It's good to go, right? So it's a juicy story.
And it's crazy because this only came out because one of the clients that found an issue was department in the UK, so a public department, and they found the issue, and then they flagged this, I think, with them or internally with their government bodies to say, hey, there's an issue here where we feel like, we're shortchanged. There's obviously public funds that we need to review, and that created this massive thing because now in the UK, this was the misuse of public funds internally for the departments, but also drawing this particular company into the spotlight.
But do you find it a bit unfair for the auditors? A lot of this fraud transactions, it tends to be whistleblowers. It's not something you really tend to find when looking at a set of book. Most accountants can sort of, massage their numbers into it, and you sort of can hide it away. Unless there's a whistleblower behind the scenes, a lot of these frauds don't get caught out.
Look, you probably, as Kev probably explains it a bit more. It's probably not clear cut fraud. It's probably just doing basic walkthroughs of everything and how treatments were for all the transactions, not just going, I did that last year. Because it's a series of audits. You go, we did that exact same thing last year. Therefore, we had the same hypothesis this year. Any deviation? No. Move on. Right?
Yeah.
Because you're basing everything. So that first year is sometimes critical, right? Because it sets the foundation of the next. So if you don't have your star performance on that audit, year one, everything else just becomes a copy paste after, right? And I got caught out with a template today, which they got told to roll over, and then pretty much I was like, I had a different set of numbers because I came to a fresh pair of eyes, and I was like, let me try massaging the numbers so they meet they're consistent with prior submissions. So went ahead and chopped and changed it, and I got caught oh no, these numbers don't look right. And then when I retweaked all the formulas, I dragged them to the prior year comparative, and then it turned out the prior year comparatives were actually all wrong. And I was like, oh, damn it. I was now trying to fit a box that was incorrect in the first place, right? So it can definitely happen. I think we've all been caught guilty of that.
Well, to simplify what they've found, so the issue is, I think it's largely related to this. I think there are a couple of other issues as well, but essentially the issue ties to refunds from airlines and suppliers. So essentially the example that I was saying before, imagine I booked a trip today to Melbourne for me and my team. We booked it at 2 p.m. At 6 p.m. we decide, actually we can't go. The client doesn't want us there anymore. The airline then refunds it to CTM, and the CTM then have a responsibility to pass that back to the customer or apply it as credits going forward for other travel. Instead, they've done some creative accounting. They've done kind of these creative reconciliations, and they've ended up classifying that as revenue instead of a liability like it belongs. And so it shows two things. Firstly, if it's intentionally done, there's an intentional kind of disguising of a liability, which should be revenue, but it also shows a bit of a control failure because ultimately this is something that if this is part of your controls and part of your processes, at some point this should be reviewed by, an external auditor, internal auditor, whoever is a part of reviewing these processes for a particularly large company. So those are the two kind of audit streams that I would think this would be picked up on. And, obviously all three of us have been in audit. Keen to see how you guys would have potentially found this, if at all.
Yeah, and I think that's what I'm my point before. I think as an auditor going in, I don't think auditors get that understanding business to that level that you can go and find a transaction like this. Something like this could be easily hidden, and it's hard to say it's auditor's fault that it wasn't found. I think it just takes, like you say, with some client or some whistleblower inside to sort of be like, something doesn't look right. Let's investigate. And sometimes, like I said, it's a change of CFO, change of management, whatever it is. They come with a fresh view of what's happening. They do certain things in other businesses some way, and they come in there and they can say, why aren't you guys doing the same thing here? And that's a lot of the things get picked up. So I don't think it's, like I said, maybe it's not intentional, but it's still an issue that needs to be dealt with.
Yeah. Obviously a different view of the view of we should walk through a few transactions and transaction types. So one that sort of goes through end to end, one that goes through and there's a credit, one through, like, goes before like a cancellation, like what happens, how do we keep a track of credits, like how do we recognize revenue and where does it hit the like sort of P&L. So I'd be checking those things just to see, like, should we be recognizing revenue then and there as well, right? So I'd be of the view of like we select the few of their transaction types, trace it through, make a call saying, is it appropriate, is it not? Like if I'm booking travel in, let's say the 30 June client, the client's now committed to the, let's say I booked my flights in on the 27th of June, but my travel date is the 1st of August. Can I recognize my revenue? Right. The reality is we're going to like different accounting rules, right? And most of it's when the actual transaction gets served, and then you can actually recognize the revenue, not when you've been paid for that trip up front, right? So it's usually when a service has closed. So it doesn't matter if I've taken it before or after. It's when the actual flight has taken off and you deserve to be paid then, right? Before that, nothing can happen. So it's just understanding timing with everything, right? So you guys need to have the experts to understand what the timing is. So just to make sure what's going on. So I'd be absolutely tracing transactions through understanding and also looking at policy documents as well to figure out, all right, well, how you guys meant to do supply credits? How you guys meant to actually recognize your revenue? What are the rules? And who makes those calls right at the end? Is there a memo or is there a letter from the CEO saying, or is that something that someone junior accountant has stumbled onto? To Hubert's point, is there a whistleblower somewhere? Like what else goes on? And how do you get those extra details?
Yeah. So are you both then, in summary, saying the auditors should have picked this up, or you're saying it's tricky too?
No, I mean, ideally they should have, but I'm not saying it is difficult. Especially now I'm looking at now, like they're two different countries, two different accounting policies. Maybe one country they're doing the right thing, another country they're not. So it depends which way you're looking at as well.
Yeah. Well, it's good to see some of you guys still batting for the oral auditor. I agree. I think there's a bit of complexity there. I think in general, though, it just shows the importance internally for us to understand our controls, but also one of the things, you can do as much testing as you want, but if you don't understand sometimes review of processes and controls, then you don't know exactly what you're testing and where you're testing the failures. So I just want to talk through some repercussions, and then before you wrap up, I want to throw to you guys to shout out maybe 2 learnings each from all of this story and the repercussions, right? So the repercussions so far, so obviously because of these findings, end of last financial year, the financial statements are delayed. I think all of the results that they publish now are kind of unaudited results until these findings are out, and which will come out next month. So that's the first thing, lower consumer confidence, because all of this stuff, no one knows exactly what's going on. The second thing is there's a clear cash impact. So it just goes to show sometimes, I probably was someone that thought this as well, younger in my career, but just because things are on the balance sheet or things are hidden on financial statements somewhere doesn't mean there's no cash impacts, because we can clearly see there's going to be a cash impact to this now. They're going to have to refund payments, disclose all of the issues that they've had with their customers, and this essentially has to go back into their customers' hands. They're going to have to work that out, and not sure what the cash balance is, or not sure what their kind of debt arrangements are, but this is something they're going to have to cough up. That's the second thing. The third thing is there's clearly a leadership fallout. The CEO stepped down. There's multiple people that have stepped down. So someone has to actively take blame for this. CEO obviously finally has put his hand up and taken blame for it, but there's got to be now clear new leadership that steps up and cleans this up for them. So that's the third thing. So they're going to have a turnover of leadership. And the fourth thing is, and probably the most important thing, is now they're going to have government scrutiny, not just from the UK government, but also the Australian government. And that erodes the trust that they have with their brand and with the consumer. Just imagine all of the stuff that's being said in the media now. A lot of people haven't heard about it, but once the governments come out and say, actually, we're not going to be doing business with them anymore, and what kind of confidence does that give the regular corporate consumer? And we can see, I think Flight Centre have come out the last couple of weeks and said, essentially, because they're tied into contracts, companies can't move yet. But Flight Centre have said that once customers' contracts are done, they're already getting a lot of people putting in inquiries to see if they can move over and what the rates and stuff are going to look like. With all of that in your minds, what do you guys reckon are a couple of learnings we can take? Because this podcast is about us as accountants looking through issues, learning from other people's problems, but also avoiding these problems in our businesses, the businesses that we take care of. So shout out and throw out some learnings that we've got, guys.
So I think one of the points you made was PwC was there 14 years as auditors.
Yeah.
So I think if you're part of a board of a company, I wouldn't be holding an audit for that long. You need change, quite regularly. Sort of get that fresh partner in there, different approach. And sometimes you pick on, they sort of focus on different things. I think that's needed. I think 14 years is too long for audit to be a one company. I think that's one learning I could take from this.
100%. And if I had to take on that, it's basically like chasing when it's your money versus when it's the client's money, really understanding like refunds aren't cash, understanding policies, understanding timing of transactions and when you can actually recognize stuff. So for me, walkthroughs of all the different types of invoice categories that we have for that business for CTM. So it's if transactions went ahead, if transactions didn't go ahead, what time is it, when can we recognize that revenue? And even if there's a complaint after, let's say the supplier has taken on, so you've already gone to Brisbane, you've come back and you actually weren't happy with the service, what happens then? And how does that work with complaints and everything else? So I'd really map out all of that stuff and then have policies around making sure that those things are ironclad with the auditors beforehand. So almost having internal audit control checks.
Yeah.
I guess this also shows the importance of balance sheets as well, right? Because I don't know how much every company focus on reviewing balance sheets. It happens, but I don't know how much they actually look into it and see what's actually in those accounts. I guess if this balance sheet was done correctly, maybe this would have been picked up a lot earlier. So,
and the final part for that part is going to be like similar to the use of public funds. Quite, rightfully so. I don't think there's enough of that happening with business owners today. We go to a portal and we fully trust them and we just expect that stuff works, right? Which in reality, someone says held a piece of string together in the background. Yes, pretty front end, website works great and you get a consolidated invoice. But the back end, someone still needs to be double checking that, right? Just because I get an insurance renewal letter saying, hey, my policy is going to increase by $500 and thank you for being a loyal customer. And all I'm going to do is jump on the web quickly, Google a couple of different, vendors, and I can just double check going, is this a competitive rate? Yes or no, that meets my criteria. And more often than not, I go, yeah, I'm being gypped to this renewal, right? And it's way quicker for me to switch vendors in that case. So I think as business owners, you need to be mindful of your cash and where you're spending it, right? And if it's for public spending, you need to be even more screened. So that expense, that flight ticket, that's ridiculous, right? For no one to question that and just say, oh, mate, it's a portal. Like, that's not on, right? That's not on. So, like, we could have been spending so much more additional funds somewhere else, helping schools, roads, nurses, etc. But we've chosen to do this, right?
Yeah. I wonder as well, I know, Hubert, you were saying the auditors should be changed, and I agree with that. But I wonder as well, because they've had a high turnover of CFOs as well, when a new CFO comes in, the auditor is almost the expert now because they know the business more than you. So it almost becomes a bit complicated because even though you're trying to question things, you almost need to trust that, oh, actually, this has been signed off for the last 5 years. And that's another thing is good to challenge us as leaders is when you go into a new business, that's when you probably afforded the highest level of scrutiny. So you're afforded the ability to question everything. You're afforded the ability to actually put a microscope over every single process and understand things for yourself with the auditors so that you're actually signing off things that you have full level of confidence on. So that's probably something that I will definitely take as a learning from this for myself.
Oh, something else on the
Cool. Well, great case study, guys. I think there's plenty of other things that we can learn from this as well. We've obviously gone through some of them. And if you're a listener and you're listening to this and there are other stories out there that you'd like us to look through and understand and talk through, We enjoy doing this, and so we encourage you to send that to us. Just a reminder as well, if you see us at the ICC in a couple of weeks, we are speaking at the Accounting and Business Expo. Ash, what are we speaking on?
The CFO-preneur. Please
That's
come
right.
down and see that.
Well, if you subscribe, like, and we'll see you at the ICC in a couple of weeks.